Discover a smarter way to give. Learn how you can maximize your charitable giving and potentially increase your tax savings with a donor-advised fund. There are 3 types of tax benefits you can get from using a donor-advised fund: potential income tax deduction, elimination of capital gains tax, and tax-free growth of the funds within the account. Here's how it works. You can contribute cash, stocks, or even non-publicly traded assets, such as private business interests, cryptocurrency, and private company stock, to a donor-advised fund. Depending on the type of asset you donate, you may be able to reduce your income tax and your capital gains tax. If you donate cash, you'll be eligible to deduct what you give up to 60% of your adjusted gross income. If you donate non-cash assets like stocks or bonds, you can deduct the full fair market value if you've owned those assets for at least a year, up to 30% of your adjusted gross income. When donating non-cash assets, you'll be able to potentially eliminate capital gains tax and the Medicare surtax you would typically have to pay when you sell an asset that has gained in value. The bigger the gain in asset value, the greater the tax savings. Let's take a look at an example. Say you bought stock for $20,000 and it appreciated for more than a year. It's now worth $50,000. If you sold the stock, you'd owe nearly 24% in taxes on the $30,000 in gains. But if you choose to contribute long-term appreciated securities to your donor-advised fund, you can potentially eliminate capital gains and Medicare surtax, resulting in $7,140 more donated to charity. But whether you donate cash, stock, or a mix, you also get a third benefit. The contributions to a donor-advised fund have the potential to grow tax-free after being invested according to your preferences. That means you can not only use those resources immediately to support the charities you care about, you can also increase the amount you have to give over time. There is one important deadline to keep in mind if you hope to maximize your giving in a tax-smart way this year with a donor-advised fund. You'll need to fund your account with contributions by December 31st to be eligible to include your donations on your next tax return. With no minimum to open and low fees, it's never been easier to give more and save more with a donor-advised fund. Learn how Fidelity Charitable can help you get started today.